Good afternoon, everyone. Good afternoon. Good to see you all today. I just want to do a quick mic check, make sure that everyone is able to hear me right now. You should be able to hear my voice and see my screen if you've clicked the live button. Awesome. Great to hear. Awesome. Great to hear, Chucks. Thanks very much for the quick sound check. All right, let's go ahead and get started here. I got the recording up and running and just want to go ahead and make sure that's all good to go. Okay. All right, welcome everyone to the PivotBoss monthly market outlook for August 2020. This is about 10 days into August here. We've had the previous week here that was pretty aggressively bullish for the most part, but very quiet strength. What we'll do here is talk about the ES, what may be coming next. We'll also look at other futures contracts as well. I also have a list of stocks here that I do want to share with you. We'll also cover seasonality, what to expect with seasonality here already that we're seeing this month play out, and what to expect into next month. And we'll also review some of the candidates that we had prior. If you have some candidates that you want me to take a look at, or some stock charts, any chart it may be, please go ahead and type it into the chat box, and I'll get to it later on when the time comes. So for those of you that are new to the room and new to PivotBoss, welcome. Thank you for joining. I see a lot of familiar names, those from our trading room, and also those that have been in our rooms before, in addition to those that are PivotBoss Masters members. So a lot of different folks here in the room. So thank you for joining me here today. My name is Frank Ochoa. I am the author of the book Secrets of a Pivot Boss. You can find my website at pivotboss.com, and you can find, obviously, since you're here in the room, our trading room community, which is at pivotboss.ecofin.co. By the end of the month, we will have transitioned over to the new Ecofin 2.0 community, and hopefully it'll be much sooner than that. Working on getting that done here this week as well. Let's take a look here at the ES, and let's talk really quickly about seasonality, and also about what we're seeing right now in the market. Obviously, we had a tremendous turnaround from the lows here in March. The COVID sell-off, tremendous, and the big recovery, tremendous, almost back to those highs. And you can also see that we've been given a very nice impulse sell-off here that has given us a very nice key range, and we have worked our way higher out of that key range. And when that impulse sell-off occurred and we bounced back, we immediately drew that key range that day, and we knew that 33.85 and 35.38 would be the next two major upside targets. We're nearly at the 33.85s, expecting to reach that fairly soon. Any pullback still is a buying opportunity for a continuation higher. And here's the top of that key range. That key range right there, very important. That's 32.31. Price could even drop into that zone and still be a buy for a continuation higher. As a matter of fact, even as low as 31.96.5, which is the FOMC key level here, the 3200 level, and this LVN, we could drop as deep as that and still be a buy for a continuation to 35.38 down the road. August has been very bullish so far, so let's talk seasonality here. Now, typically, we talk about seasonality in that August tends to be a bearish month, where we're expecting the August pullback. Last year, we were expecting the August pullback right here, and you can see how we sold off. First trading day of August, tremendous sell-off, and that tends to be a great buying opportunity for the end of the year. And you can see the August low was the low the rest of the year, and it rallied and closed near the highs of the year. October also tends to be a pullback month, and you can see only 2.5, 3 days of a pullback in October, but it was pretty deep, comparatively speaking, and from there it slingshot higher as well. So this is the blueprint for the August pullback and the October pullback opportunities heading into the end of the year, the Santa Claus rally, right? As we just rally into the end of the year, that's typically what tends to happen, right? So we would tend to say that August has a pullback month. You have a little bit of a bounce back in September, but really it's the shakeout in October that can lead to continuation. But this time around, things are a little different. This is election year cycle, and in election years, that tendency tends to be off. It tends to reverse. And this is also brought to us by one of our traders in our room, JP, by bringing some stats to us about election year cycles and August seasonality. I run my own numbers here for the last 20 years, which means the last 5 election cycles from 2000, you got 04, 08, 12, and 16. That's the last 5 election cycles. And what I've seen here over the last 5 election cycles over the last 2 decades is that the August pullback is not an August pullback at all. Instead, in an election year cycle, the average is a gain of 1.73%. So 1.73% gain, plus side, for August in election year August months. So that's interesting, and that's over the last 5 years since 2020. And we're already starting it pretty hot. We're starting it hot after kind of coiling up here, and we've broken through the top of the key range. And the first week has been money so far to the upside. And again, we've gotten in a stretch here that any pullback, even if it's a 1 or 2 day pullback, could be a tremendous buy for a continuation into the end of the month. And that could take us through 3,400 pretty easily. So election year, August pullback is not an August pullback. Instead, it's a gain of 1.73%. Now here's where things change. In September, which is here, the tendency during an election year cycle, you have the election year, August here, which is up, and in September it tends to be down 2.2%. 2.2%. So September could be the pullback month. We may see this thing continue higher, 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 and if that happens, it could be getting people long above even the highs for the year. And imagine being long up here at the highs of the year ahead of what could be a pretty wild election come November, and especially an election where there already will be some uncertainty because of the increased mail-in ballots and the likelihood of not needing to count those over the course of 1, 2, 3, 4 days or maybe more. So not sure that many folks will want to be long up here above the highs of the year, September, October, heading into the November 3rd election. So if it does stay up here for a while, that could be quite the distribution ahead of what could be a pullback. So just some things to consider here moving forward. But right now, the month of August has a gain of 1.73% on average during election years since the year 2000. And in September, the drawdown is 2.2%. So just keep that in mind. As we drive higher here, it's buy the dips until proven otherwise. We've seen a higher value relationship month over month here, higher value, higher value, higher value, which means that whenever price pulls back into that zone, it's a buy opportunity, and it pulls back, it buy, pull back and buy. We haven't tested it yet this month. We took the previous month's close and high bid first, but if we do get that 1 day pullback, again, say to 3230, maybe as deep as 3196 or 3200, that could be a great buy opportunity for a follow through into the beginning of September. And then perhaps in September you see that 2.2% pullback on average. So just some things to consider here with seasonality as we head into the end of the year. But from a broader perspective here, there's been a ton of movement this year. You have this huge sell-off. You've had this huge recovery. Markets don't tend to do this for very, very long. Instead, what will happen will be once it finds a pivot top, it will find a pullback and it will find itself a range to comfortably trade in. And it could be right in this upper distribution. We have a lower distribution, in here, and then you have your even lower distribution down here. So again, perhaps through the highs. Then at some point we may see some sort of correction that could just set the edge for the range for a while. Because again, this market is just, this is a lot of action here. And the most, I'd argue, that we've ever seen. Ever. And so, remember, this was a huge move back in 2018, and then this Q4 move dwarfed it. And now this move was just 2-3 times percent this. So that's huge. So right now, again, to do it down, then all the way back up, at some point we may see a strong pivot top that gives us an impulse move to set the edge. So there's some seasonality ideas there for the ES. Again, expecting more upside price action, expecting for any pullbacks to be defended heading into a strong finish for the month of August, and then looking for signs of a bull trap at highs in September, or perhaps some sort of broader rejection that could lead to a pullback in September. So that's going to be the blueprint and the framework that we're going to use moving forward for the ES. Let's take a look at the NQ. So here's the NQ. Now, the NQ here has been in its own kind of orbit. It has been tremendous in kind of the rebound that we've seen since the COVID sell-off here. It's been instrumental. Tech has been in keeping things as good as we can, and in some cases even better. And you can definitely see it from the charts. Lots of things that have pulled back, and they're doing it in different rotations right now. It's not all at the exact same time, but things that pull back within the channel tend to be bought right back up, and we'll see some examples of that here pretty soon with our candidates list. But we appear to be near the upper end of the current channel here, which means we may see more of a pullback. Obviously today we did get a nice rejection here off the lows. It was a V-bottom rejection today. Very rare intraday V-bottom where it bounced pretty hard. We saw it intraday and saw how strong that was. And to never come back to it intraday again, that's very rare in the current market. And but at the same time, these haven't been just kind of, we haven't just seen this thing just hit one time and go right away. It tends to come in here and kind of mess around for a second and then explode higher. So as long as price remains above 10.8, 10.850, so we could drop even into that zone, right? Here's 10.8. That could still be a great buy for a continuation higher, or a trap below 10.8, for example. So this one is trending up. It looks fantastic still. Anytime you see a big high range move on, say, a 1, 2, or 3 day basis, so this is a big 1 day pullback, this is kind of a 3 day big pullback, there tends to be the snap right back pretty quick, and that continues to remain the case until proven otherwise. And now we have some upside targets that we've been focusing on since July here, where we have this impulse rally back to this mid. Here's your key range right there, and now it's sitting right at the top of the key range. So this is a spot where if it can continue to hold, again, as we mentioned, 10.8 here, it has a shot to rally to the 50% extension for the key range, which is 11,723. From the current low of the month, that would also be right inside our high probability target range. This is the ADR, the PivotBoss ADR targets. So it uses the low of the month and then forecasts average daily range over the last 10 months higher. That's 100% average. That's 75% average. High probability target zone. Right now, that target zone takes us here between 686 and 956. So we have a very good target zone here that this thing could reach by the end of the month. So again, while today's low may not be the low, we still may see a little bit lower of a low. We may still hit 10,800. That will be about as low as we go here if this is going to remain bullish for this thing to continue. For bulls to keep this thing continuing higher, they need to continue to keep it above this line right there. and that is the midpoint of the previous month's range. And in an uptrending market, that level will remain intact and price will continue to hold and close above it. As soon as price closes below that level, the break is on, and now you're headed to the low, and you may be headed much, much lower than that. So right now the trend remains intact. We may still see a little bit lower, but boom, to the upside, 11.7s could be ahead. As a matter of fact, last week, was it the week before, we had this as a long opportunity here this day. Here's the FOMC key level. We had the bullish outside day. We called 10.7 the entry point for a potential 1,000 point move to 11.7, and that was a perfect bounce off that zone the next day and a quick rally up. This may be the first pullback here ahead of completing that move now. So there still may be an opportunity to get in between 10.8 and 10.9 to see that move through for another plus 800 or 900 points to 10.7, 11.7. So this is a very good zone. Now, one thing I always mention here is that since we are at the top of the key range, here's the key range high. This one needs to work out, because if it fails here, it opens up a move right back to the key range mid. That's 393 and the 10.3 LVN, which it bounced off of here and just shy of here. So again, if there's a failure to say hold 11K on a daily closing basis, we may be headed for a broader pullback as deep as the 10.4 to 10.3 zone, which would be a great zone to buy again. I mean, look at this LVN. It's just another great zone to watch for rejection and buy until proven otherwise. So that's a look at the NQ. Again, very, very strong. One thing I did want to look at also was gold futures. Gold futures, one thing that's very interesting about gold today is that there are a ton of sell candidates in the gold industry group right now. So gold is firing off a sell signal here. The previous trading session, it fired off a bearish outside day. So that's the bearish outside day right there. Oh, it didn't grab the tool there. So bearish outside day in the previous session here. And then you have the midpoint retest today with a sell signal. I wouldn't say short gold here, but there's a ton of stocks and ETFs as well in the gold industry group, from GLD to GDX to any other of the other ones in the industry group, and they're all showing bearish outside days and rejections today. Now, how far does that lead to in terms of a pullback? It may just be right back into the trigger zone and go. But it's also something more significant than that. Because look at this move that we've seen here. That's next level breakout into new highs, right? And look at this right here, very thinly traded. At some point, we're going to need to auction all the way through those levels and then all the way back up in order to thicken up this profile like we've seen over here. And so you need to auction down through those prices, but you're likely going to see an LVN left behind, call it between 1825 and 1850. So this may drop as deep as 1850 and then bounce all the way back up to 2075. By the time that's over, we've fattened up the profile here, and we've created a new price distribution completely above the prior one. So again, early warning signs right now for gold and the gold industry group. I hesitate to say it's a sell because this market is on fire, and ultimately I believe it's headed higher still. We have the 200% of range extension at 2211. 2211 would be the next major target, and after the next major pullback, there could be a nice bounce and continuation into that 2211 target. So gold continues to remain on fire. We are seeing some initial signs of weakness here. Bearish outside day Friday, midpoint retest and lower today with a sell signal. It wouldn't surprise me if we got a flush event pretty soon, perhaps tomorrow, where this thing tries to flush a bit lower. Now, whether that thing stays down is another question entirely, because this market's been hot. So it wouldn't surprise me if we bounce after that. So right now, again, keeping an eye on this one, but 2211 still upside. For those of you that were following along with this key range, this is the key range we had back in March. We got the key range midpoint there, third week of March, and right on that day we already had ourselves the upside targets. We had our 50% target at 1831, and we had our 100% target at 1957. So we knew back in March that these two would be the upside targets. It took a while and it took some patience there, but because this right here was a sideways range for 3 months, 2.5 months, but eventually it paid off and got to both targets and then some, because it went 250% here. Sorry, it went to 100% and then 150% and can still go to 200% pretty soon. So this has been strong, expecting it to remain strong, and still looking to defend pullbacks until proven otherwise. Now other metals have been tremendous as well. For example, SI up another 6% today. This one has seen a lift off that is incredible. Again, whenever you have this thin portion of the profile here, it shows you how thinly traded that was, and this thing explodes higher. Not like this big rounded price action down here with a clearly defined value at 17. It needs to re-auction through that at some point to retrade. Perhaps it only gets down to 25s, but it needs to do something. Perhaps it gets down to 22s and then creates an LVN and then bounces back up. That would create a rounder profile here, and then you'd get your double distribution profile. So right now, this one's been explosive to the upside. Again, I wouldn't sell it, but it could be due for some sort of pullback, and if that's the case, there could be an opportunity to sell it until it gets to an impulse low, at which point it bounces back to the mid and creates a key range. Okay, let's see. Let's take a look at crude oil here. Nope, that's not crude oil. Here, let's just click that right there. I've been a little dumbfounded by crude oil lately. The price action is just very odd. Obviously, we had the 10 to 40 rally, which was tremendous, right back to the key range. We finally got to the 200-day moving average after it broke down below it here. That's just pretty tremendous, the way that's played out. But really, since June, this thing has gone painfully sideways and flat, with each month getting more and more compressed. You can see the range for this month was here. I guess that was the range for the month. The range for last month was here, and the current range for this month is this. So it's really, really tiny ranges that we're dealing with right now. I really can't add a whole lot for crude because, again, this is very odd price action. But it appears as though this thing is still pushing higher. This may be a transitional phase, because after this move here and this bounce, our goal was entirely to get back to the 200. It finally got there this past week, and now what? And so now we're trying to figure out now what. It's building energy around that zone, and the next move is coming. It's either going to be deep for a shakeout, and if that were to be the case, 28 could be in play, and then it could bounce back up and head for 50. I don't know if we get down that deep, but right here would be another LVN to work at, and that is 35. What if we drop to 35? That would be another zone to watch for a bounce back up and perhaps a push back toward 49. So those are going to be some things to consider here for crude oil. At the moment, I kind of want to redo this key range here, so that's what I'm going to do. I don't think we've reached a midpoint, but we're going to see what we have here. Let's grab this. What I'm going to do is I'm going to mark a key range here, 38.72. is that low. I'm going to add a fib extension tool, which we've modified to give us the levels we want. 43.52 is the upper target. The lower is 41.12. That's about... Okay, let's just drop it there, and then I'll make it 12. Okay, so we got it. Sweet. Impulse low, rally, 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 strong high, impulse high, snap back quickly to the midpoint. We got ourselves a key range here for crude oil. And this one is the one to watch for the next move. And you can see 43.50 is the high, 38.72 is the low. So it's about 5 handles. 5 handles in width. That's pretty solid. That takes you down as deep as 33.92 on a 100% move down. And on the upside here, it takes you as high as 48.32 for the 100% target up above. Either way, you could fade both edges here for the 5 handle move inside the range. So what I mean by that is if price were to drop down here and below this low here there's a bear trap, that could provide an opportunity to trap and reverse it back to the midpoint of the range and the top. That's your 5 points there. Same thing on the top. This thing can come up here and reject here, and then it can come back to the mid and down to the bottom. So right now that's a great key range to take with you here for crude oil. And there could be a very, very good move here to get this thing up toward 48.32 down the road. Although, in order to get that move, we may need to see a little bit more energy built up. But perhaps it's already done so. Perhaps it's already made that, built up that energy to fuel the tank and go. We'll see. Okay. I wanted to take a look also at the Russell 2000 RTY. And then we'll jump into some stocks as well. So right now we have RTY here, and recently this thing rallied through 14.95 previous highs and is through the key range high as well. You can see right here again we have a great key range from this low to that top up there, that high, and then it took quite a bit of months here to build that energy. And then there's the transitional breakout day. It held the breakout point, and now it's on new highs. Those are all very important things there. That's the high, though, and it needs to kind of stay there above that high. It can come back and pull back, but it needs to quickly regain and go higher. If that's the case, then you have the 1723 upside target that's in play. The final market structure for this one to really recapture is the one that it's trying to recapture now. And so when you look at this market here, you have this market structure here that has been left untouched since earlier in the year. You have the market structure below it here, which has been the primary market structure for a while. And then you had all the stuff down here. You had this one down below, and then you had this one right here. So for this one to break here, that was it breaking back into this market structure, and that's what you've gotten here recently. A great move right to that zone. Now at 1600 to 1620, that's the big zone that we talked about before. If we break there, we really drop, and now we basically almost come all the way back to that breakdown point for the Russell. So this one's going to be very interesting as well. I think for this one, based on market structure here, when you make that wave all the way across, there's a tendency to come right back to the bottom and then do it again, and maybe trade in here before you go up. So when I'm looking at the Russell here, there's a potential to get a swing back as deep as the 1420 level. 1420 is right in here. Breakdown point 1420, 1422, right? Unless it can reclaim prices above 1620, in which case it opens up 1720. and then now you're inside this new distribution here. So this one is very interesting because right now it's starting to show a market structure edge. You know, the top end of this edge, and then there's a tendency to come back and trade like this. So if the Russell's going to go down, it can tend to be an early indication of weakness for the broader market. We'll see if that tends to be the case moving forward. Now here's the YM. The YM has gotten a significant breakout to the upside, and you can see why these things look so strong. Nice impulse sell-off with a bounce back, so we have ourselves a great key range. And then you got all this pent-up energy in here where it's compressed, and released it over the last week. So again, if this were to see a pullback, even a 1 or 2 day pullback, say anything below 27K, on a swing basis, that could be a phenomenal continuation up toward the 28.5 level on a short-term basis. But the 50% extension takes you up to 29,232. 29,232. So again, if this thing were to pull back to 27K, maybe even a little bit below, there could be a 27K to 29K swing trade opportunity by the end of the month. This key range high is going to be important because we just crossed it. So again, we may see a pullback. But if we see a pullback, the tendency has been for higher lows, higher lows, higher lows, except for that one. But higher lows as we've channeled higher. So after these higher lows in that rally, any pullback should be shy of those lows. So again, below 27K, maybe into 26.7, 26, whatever it might be. If we were to get something like that, it could be a phenomenal move right to that point here. Not sure how much we get, but again, that's going to be a trade to watch out for. If there's a hard rejection of these highs, say we get an outside day down tomorrow, then perhaps we work back to that mid after all, with a shot to see him move all the way to the bottom edge of that key range. So again, we're right at the point where we could reject hard, or we can start to build the energy to really get that upside break and continuation. The way it looks, everything's pointing higher, and you just need that one great rejection day that takes out some lows, and boom, this thing could be headed much, much higher. So that could be a really good one right there. Oh yeah, price in the YM is just above the key range mid set back in the February-March time zone there. It rejected there at the high of this key range. Yeah, you have this bounce, boom, boom, right in that area, right? That's an important one right there as well. I don't have that one marked anymore, but that's a really good one. That's going to be important still moving forward. Great point there, GG. Okay, let's jump into some stock charts really quickly. Just last week, or last month rather, didn't have a whole big list of candidates, but we did have several that did really, really well. Just a few of them that we did off the top here. ABT. And ABT had a lower value with a change of bias. And look how it just rallied the rest of the month. Right? Lower value with a change of bias would say that price closed above the top of the pivot range in a lower value state. And that would suggest that you're about to see an upside rally. And it went from wire to wire to the upside. That was money. Very, very good. AEM was also bullish. This was a lower value with a change of bias. And you can see again that would be the opposite of what we just saw, but also bullish. And look how this thing has exploded higher to the upside last month. So AEM did quite well. Another one we talked about was Target. This one did well, but was less muted. It took a little while to get going. This was an inside value relationship. So this pivot range was inside the previous month's pivot range and is also quite a bit more narrow. So we talked about that being an explosive energy building pattern. And you can see, again, look at the explosive move we've gotten here lately, right? It took a little while to get going. It popped, and then the pullback here, and after that pullback, it exploded higher. But that's the type of move you would expect when you develop an inside value relationship like that. Again, each of these relationships I just talked about on these first 3 stocks are all from my book, Secrets of a Pivot Boss. So it's the same things we've kind of been watching for a while, and you can definitely see they continue to work out even in the current market. This one was the best, by far the best candidate we had last month. But again, you can never foresee this type of thing. But what we had was this pullback right here. So that's what it looked like. You can see a big move up, then kind of got like this, and then here it was with a higher value relationship for the month. You had a buy signal here, a perfect midpoint retest at 950, and then it explodes to the upside and rallies to 35. Again, this market is kind of bananas in that you're seeing those types of moves happen. You could never expect that type of move, but when you see a windfall move like that happen, let it happen, right? Let it happen. Let it get its energy out, and then look to take as much as you can, but take the windfall profit at some point, because we also know that it can come all the way back. But that was incredible. That was one of our buy candidates with a perfect midpoint retest, narrow range, and explosive rally. That was a 200% move, 250% move off those lows. Just incredible for that one. Let's take a look at some candidates here for the month and months ahead. TDOC is one that I liked today in our trading room. I actually traded this one today late in the session and got in with a couple of minutes to go in the day. Basically, TDOC has been fantastic. It's been trending higher at an incredible pace. This is one that Dwayne brought to the room here in our trading room right away in early February, March, about being a great candidate here to look forward to. We talked about this one in the March outlook as being a great buy candidate off the 100 zone. And here we are seeing a top at 253 here recently over the last week. That's just incredible strength. But one thing we've noted this entire time with this one as well is that it continues to channel higher very, very nicely. Look at this channeling behavior. Any deep pullback could still be defended for a great continuation. This right here is an impulse sell-off, so a strong pivot high, and then look how price opened the next day below that midpoint and sold off hard. It's now dropped below the previous month's low price, and we saw a rejection occur here today. Not a fantastic rejection, as I mentioned in the trading room this morning. Like, it's not like a V-bottom reaction and rally, but the look and feel of it on an intraday time frame, for example, the 512 tick chart, looks very reminiscent of an accumulation phase down there. So to close back above the previous month's low here is solid, and you get a signal to boot. The idea is that we're about to get a snap back to the midpoint of that impulse sell-off, which would take us back to 219. That's the high probability trade. And that high probability trade can take place over the course of the next 5 to 7 days. Sometimes it can be faster than that. But basically, we're looking at the inverse of this move right here. You had the strong low, and then it rallied, then it found a strong high, and then 1, 2, 3 days later, it was at the midpoint. That's what we're looking for, is like a big, quick bounce back up in this one. Now, the way that I played this one, but there's many, many ways to engage it. The way I played this one was by selling the 210, 205 put spread 11 days out. So I'm betting that price will close above 210, or at least push beyond there and be above it, 11 days out. So I'm not even shooting for this, but as soon as price hits that 219, for all intents and purposes, the trade is done. For that idea, because this is the key range low snapback to the midpoint trade idea. But as I mentioned to our traders in the trading room this afternoon, if you have a longer term time horizon, I'm looking 11 days out. But if you want to look 6 weeks to 8 weeks out, you have the 272 target that could be in play. Again, this is 6 to 8 weeks out. we could be at the 272 target. That target is the 100% extension from this key range. So you got this impulse move. If you can hold this zone, boom, 272 is ahead. So right now, trading as low as 185 today and currently closed today at 193, we could see a continuation toward that target a couple of months out. So that's going to be one to keep an eye on. Again, I did get in on that one here today on a swing basis as a short-term idea, and wouldn't mind getting in on that even tomorrow on a longer-term basis as well. Another way to get in on that is to say buy the 180 in the money call. You could also buy an out of the money call, say buy the 205 out of the money call and let price slingshot into that direction, or buy a call spread, say a 205, 210 call spread out of the money, be a little bit cheaper. So there's many different ways to engage this one, but this is a great opportunity here on that swing pullback. When you get a strong high the way we got, and then you have a pretty good strong low. Ideally, you want a strong low. This one's good enough to try, and that's why I put in on that one. So again, that's going to be a good one here to watch out for. You know, that's a great question there by Dwayne. Do you know how the merger with Livongo affects, if I'm saying that right, TDOC? I don't know, and that's the one thing I thought of today before I placed the trade was, you know, is that if this fails tomorrow, is it going to be because of that merger there? And, you know, that one is actually on the list as well, as we'll look at in a moment, LVGO. Where this idea fails, because I always got to tell you where it fails, is a failure to hold 185. You know, if this thing can't hold 185s, but you're going to have an early notice on a failure to hold 190. If it can't hold 190 on a closing basis by the end of the day, we may need to go find a stronger low, and then that might be as low as 150, and then we have ourselves an even bigger bounce back that could happen ahead, right? Because we're going to get an impulse move to a midpoint at some point. We just need to find that anchor low, and right now betting that this may be the anchor low before we bounce to 219 soon. And if it is the anchor low, 6 to 8 weeks out, 272 could be ahead. And WDW here mentions BA has a similar chart to TDOC, which is a very good question if that's the case there. I don't see how that's the case, but as these are kind of going the opposite way, but maybe I'm looking at something wrong here. Let's see. Oh, this right now has a great impulse move here from this high to this high. That one's a new key range that could be in play as well. But yeah, that one could definitely be in play that way. And yes, the channel, you're exactly right, is right in play as well. You have this kind of channeling behavior here. Again, this one hasn't wanted to come get the 200 yet. It hasn't touched it all year. Last time was December of last year. There's quite a bit of energy here, and we've been building out. So if it does move off the lower portion of this channel, while I don't know if it gets up high as this point here, perhaps it could. Coming back into the previous high and into the 200 could be a really good snapback opportunity. Yeah. Back to 240, 220 to 240 based off that lower boundary. So very good point regarding BA there. Thank you for that. Twilio is another one here. Twilio is a good candidate. This one, again, is another one of those tech stocks that just continues to do quite well here. Pullbacks to be bought. You can definitely tell the trend has been intact. Pullbacks to the PIMA trigger zone consistently bought. This pullback has been a little bit bigger, and it actually closed, prices closed below the strong PIMA trigger zone, which is the 8 to 21 zone. and is inside kind of the lazier 21 to 34 zone. You don't want price to close below 34, and you definitely don't want it closing below 55 because that will change the trend. But this is a deeper pullback than most, right? This is good, so it did get a little deeper. It came right back to kind of where it was before on a breakout here. And this is the previous month's midpoint. So what I usually say is, if the previous month's high and close are very close to each other, there's a tendency to see a quick rejection. And that quick rejection can bring you right back to the previous month's midpoint like a magnet. Boom. Very quickly. There's the magnet move. From there is a decision point. It's either going to hold the mid now and retrade back to those previous highs and perhaps through it, because that's what markets do in an uptrending market, right? They pull back, higher high, pull back, higher high, pull back, higher high. But if it fails at this pink line here, it opens up the lower half of the last month's range, which takes you to the previous month's low price. Right now, based on the trend, based on how this price has played out, based on the failed lower low today, so it was a failed new low where price pushed through the previous low of the previous week in the previous session and quickly rejected. I mean quickly rejected on the intraday time frame, turned around and closed back above the previous session's close price and back above the previous session's midpoint. That's a pretty good rejection. It's not tremendous, but it's pretty good. And that could lead to a bounce right back toward, again, recent highs. 280 could be an easy magnet, 275, 280, but then perhaps through that could be 295 to 300, because again, you get a new high, right? If you're channeling up. So this is a good spot right here where if it can just hold this zone, there could be a move that could take you somewhere in this area between 295 and 310, with the quick high probability move being right here, 275 to 280. You know, boom, quick move to here, and if it can muscle its way through there, you get more upside ahead. Failure to hold that pink line on the closing basis opens up that level. I like this one. Looks really solid. The other one here is kind of the TDOC candidate as well. Livongo here. Again, not sure how this merge is going to affect, but this one looks very strong as well. It has been strong. It doesn't look. It has been clearly strong. Exactly what we look for. Pullbacks inside the Pima trigger zone have been purely, buy opportunities this entire time. And now we've gotten the pullback over the last few days with another strong rejection. And again, the intraday low today was very, very strong with absorption taking place. Okay, looks like we lost signal just for a second there, but all back up and running. So just real quickly with LVGO, again, not sure how the merger here is going to affect price action for this one in TDOC, but the trend has been fantastic. You've gotten your impulse sell-off from 150 down to the 111 low, which to me means that at the very least we have a bounce back to 130.68. 130.68. We're at 121 right now, and that could be by tomorrow's end. By the end of tomorrow, we could be there, or we could be there 5 days out, right? But as long as price can stay generally above 117, 115 here, and close above this zone by the end of the session over the course of several days, we'll have a very likely bounce back toward 130 level. And it could even go higher than that. Again, if this is too much here, then price probably wouldn't get much above 135, 137. And that's where you'll start to see more of a top come into play. But so far, this one hasn't been one to fade, really. It's been one to defend for many months now. We'll see if this 117.5 can continue to be the zone here to defend. Over on a pullback, again, could be a great buy, even if it's just to the 130.68. That's the high probability target right there. And again, a way that you could do that would be to sell a put credit spread there, say selling the 130, 125 put credit spread, that could be an easy way to go. And then there could also be, again, buying a call spread or whatever the case may be. But this looks like a great opportunity here. But we'll see. Oh, thank you. Thank you for that. There's an explanation on Seeking Alpha for merger, TDOC, and LVGO. That'll be very, very helpful. Awesome. Thank you for that. Let's see here. We now have TDC. This one's a bit different. TDC, Teradata Corp. This one's a bit different in that it has quite a bit of energy that's built up, and it's gotten above the 200-day average for the first time in quite a while. So for the first time in quite a while to get above the 200, right? The last time was here and it just got crushed. This could easily be get some folks in above the 200 and then wipe them out. That could certainly be what happens here. But the reason why I put this on is because we had a lower value with a change of bias for last month, or for this month, right? So lower value from last month to this month with a change of bias with a close higher. And so far we've exploded higher out of there. And we've reclaimed the 200. And look at this amount of energy here that we have built up. That could be pretty tremendous. We also have an impulse move that can be had, say, from this high to this low, back to that mid. So if it can start climbing through that high, there's about +7 here that can be seen. So +7 through here starts taking you into the 32, 33 zone up above. So this one is one that if this one turns out to be true and it's a rally ahead, because of the energy it's built down here, the accumulation rounded bottom, the lower value with the change of bias that has lifted this thing up, earnings is behind us and we've gotten a gap up. This looks like one that is about to embark on a multiple month uptrending staircase move higher, where you push higher and then next month you have higher value and it drops and then goes like that, and then next month higher value and it drops and goes like that. And 2 to 3 to 4 months later, we're probably trading somewhere around 34s. So you had 1, 2, 3, 4, 5 months of compression. At the very least, 5 months of compression. That means you got 3 to 5 months of trending price action. That means that, August, September, October, November, December, that's 5 months. This could rally into the end of the year. So this is my candidate here for an end of the year play. If you want something to say, hey, let's give it a shot to see if it can go into the end of the year. This is one that has built up the energy for that cross-country move. How far and how high does it go, we'll see. But it may be a very good one if it can continue to hold, say, above 22s. If it can continue to hold the 22s, got a good shot to continue higher out of this one. At least until next earnings, right? So at least good 3 months out. So that's TDC. Let's see, we have CDNS. Now CDNS is a very, very short-term buy the dip opportunity. You can see this one has been trading on 4 to 5 day rotations and then a bounce. So 1, 2, 3, 4 days down, and then on the bounce day, you got the 1, 2, 3, 4, 5, 6, 7 days up. 4 days down, 5. So this one over here is at top. Then you go 1, 2, 3, 4, 5 days down, and then 2 weeks up. This one was 1, 2, 3 days down, and it goes up about 5 or 6 days. Down here for about 5 days, 1, 2, 3, 4, 5, and then up for about 10 or so. So we're in that pattern at the moment. Again, you just continue to kind of do it until proven otherwise. This isn't the strongest reaction, kind of like a signal bar like we've seen over here. But it doesn't necessarily have to be. It's done good enough, and it's inside the Pima trigger zone, and it's holding the 105. So as long as it continues to hold the 105s, there's a shot to see a 2-week rally out of this one. A 2-week rally will start to put you in the 114 to 117 zone. So this is the 114.66. This is 117.67. That's your zone. Just call it 116s. So from the 107s, you got about 116 that could be ahead, and that could be an easy target over the next couple of weeks. So that's a good buy the dip candidate right there. That could be ahead. Another one here is INO. INO came out with earnings after the bell here and is kind of all over the map at the moment. It did have a squat bar to finish the day, so this is a squat buy signal. It's forming right at a major LVN. This would be the LVN to defend if it's going to try to explode up again, or at the very least kind of rotate back to 28s. So we're trading 18. We may see a high probability bounce back to 28s. And it doesn't even have to continue higher. It may come right back down. But right now this 18 LVN down to 17 is very, very solid. I don't know if today is the low day. It is a buy squat, but that could still be a lower low. I would love to see it take out the previous month's low a little better. Previous month's low is 1835. Today is 1823 low. So it did take it out, but it would be nice to see it flush and then go. So there may be another day or two for this one, but if it can stay above this LVN, I think there's a 10 handle move. That could be more than 50% rally here back toward 28s. And I see several candidates here coming through on the chat. We'll get to those here momentarily. I have a few more here to get to. First, this is Costco. Now Costco is one that's broken out here recently. This is one we've talked about in our trading room as having seen expansion, the first major wave of it already. You can see this large key range right here. And then it's built out inside that key range for many months, right? March, April, May, June. And then the breakout started here in July. That's an inside value relationship in PDOW. Big move up. Market's just reopened right now. So that right there is a huge, huge move that could still see expansion up to 379s. So that's near 380 there, 379.14s. And the high here of the key range is 325s. So we could theoretically pull back as deep as 325 and be a 50 handle rally up to 375 to 380. All of this action right here has already broken to the upside. And again, with that breakout here, it still suggests more upside ahead. And 380 is still above. 352 is still above. So this one has a ton of energy. It's starting to get the breakout where, 5 weeks into that breakout, and there's still 3 to 4 months of potential trending price action to that 379. I'll get to Walmart here in a moment. I'm finishing a quick list here of the last few that I have on my list, and then I'll get to the rest that came up here in the chat. So this is Team. Now, Team is on here as a buy candidate here, but it's not. It doesn't have an actionable entry trigger just yet. It's one of those that could get that entry trigger pretty soon. It's kind of on the watch list to continue to watch, but it's not really actionable just yet. The 160 level down to say 150, right? That's your breakout point here. You had all this built up energy in here, and that breakout. There still may be some sort of reaction that happens down to here, and if it can reject the 150s, that could be a zone to engage this one, buying at 150 for a rotation back up. It's basically we're on this kind of deep move right now, and where are we going to find that strong pivot low? And once that happens, we could snap back right back to the recent high. So boom, right back to the recent high would be 200. So where is that low going to come? Anywhere between 150 and 160 may be that low. If we get that real rejection type of day that we're looking for, there could be a fantastic rotation back up. So this one's not actionable. It's more keep an eye on it because it could be a really good opportunity soon. AAOI. With the market up right now, and I got all my data flowing, it's going a little slower here. This one has had a 2-day pullback that's been really tremendous right now. Again, this one doesn't have an actionable it's time to buy just yet, but when this one has 2-day high range days, when your 2-day ranges are pretty high, it's at the turning points of this chart. It is literally at every single turning point of this chart, and the 2-day range is very high right now, and that suggests that we may see a turnaround as well. So we may see a reaction rally out of this one. A midpoint retest would put you at 1564, but it could also continue right toward the high and maybe even through that level. So this one may see an extreme reversal opportunity here in the sessions that follow. Perhaps tomorrow could be a failed low with a rejection, and then we could start seeing this thing bounce back up. So this one, again, not actionable at the moment, but this is one of those rubber band trades to keep an eye out for. This one's under Armour. This is another one that has some multi-month trending price action potential. It has been holding at the lows here below 12 for several months. And you can see, again, very good market structure here. This market structure below 11, 12 bucks here. That little market structure. You kind of have some higher stuff up here, and then you have this little guy here. So right now, the fact that we've been down here in this little box, and now it's rounding off, we got very clearly defined resistance at 12 bucks, which is right at that low. This is building the energy for what could be one of these moves that get you back to 17, maybe back to 24. If it gets you back to 24, closing price today, 1071, that's more than the double from where we are. The problem with this one is that this is one of those candidates that you just don't know when it's going to break out. It looks like a great opportunity here, but it could still be sideways 2 months out from now, and then the breakout could happen. So with this one, we don't have a discernible breakout just yet. It's one of those candidates that you have to be in on the accumulation phase or be in on the expansion phase. But again, you can choose how you want to engage that one. As soon as it gets above 12, it will be a fairly quick move back to a gap fill and composite V pocket 20.8. So even an entry at 1040 could double this thing to 20.8. If you are able to double it, sell half your position, and now you have a free trade using the market's money for the rest of time. So that's the way to go with that one. So again, something to watch out for here. Not sure if it's going to break out anytime soon, but again, something to keep on your radar as we move forward. The other one, the last one here on my list before I get to your suggestions here, is Yeti. And Yeti here has been a very bullish candidate. Again, rallying from 16 bucks down here to 55 bucks just a few days ago. That's a tremendous move right there. One thing about this one here is that it's been very aggressive in its trend and has really pushed through recent resistance here at 38 bucks. So you got that 37, 38 bucks, and it broke through it and rallied to 55. So theoretically speaking, it can come all the way back down to this zone and still be a buy back up as it tries to create new market structure, above that high. So right now we are on the pullback phase. It's had a pretty tremendous pullback over the last 3 days. And that's about what you get here. You're getting 3 to 5 day pullback. So right now this is set to 5-day pullback or 5-day range. It's measuring the highest high to the lowest low over 5 days. So that highest high to this low, 1, 2, 3, 4, 5. Then this highest high to this low, 1, 2, 3, 4, 5. This high to this low, 1, 2, 3, 4, 5. So it's close. And what it's given us is a quantification of that. And if you look down here, each of those cases are about this big right there. That's about where we get, anywhere in this zone for the most part, which is about 6 points. 6 points of range. So you pull back about 6 points, and then you rally about 12. You pull back about 6, and you rally about 12. You pull back about 6, and you rally about 12. that's been the case here. This one rallied 15. So right now we've pulled back 7.8 points. We've hit the pivot range in an uptrending market, just like we've done before a bounce last month. Over here it hit the pivot range and bounced. Over here it hit the pivot range and bounced. No test here. So again, here we may see a bounce that happens over the next 2 to 3 weeks. A bounce would take you likely into the 60 zone up here. You have the 60s up here that could be in play. It's not going to be very easy because you have obviously brand new all-time highs here that would need to be pushed through, but it's been doing that anyways through this entire time. So if price can hold here, this could be a great opportunity to get this thing higher. High probability target zones between 55 and 57. And again, this one may not be due just yet for an entry, but tomorrow it may provide that rejection low that could get this thing going to the upside. So this is the last candidate here that I had on my list. I know many of you have put in candidates over here off to the side. So let me grab some of those. I think the first one here was Walmart. Oh, it was Rock. Okay, so we'll start from the very top here. ROK. Oh, ROK. So this is Rockwell Automation. It's popping up right now. Again, with this one here, you're right at a kind of a triple top resistance zone. The old mantra, I guess, the old saying is that there's no such thing as a triple top. You usually see a breakout at that point. It's not always true, obviously, but I mean, that's usually the case. It's kind of an ascending wedge, and you're right at resistance. It's a do or die zone where it has to either make a decision to go back down to 200 or it's about to see some lift off. And in this case, this one's been very strong since the 120 lows has nearly doubled and has been holding above the highs of the year from early part of the year. So that's a really good box that is formed here that appears like more upside could be ahead. And through 230 opens up 260 pretty easy. You have a 30 handle back end on this key range, so 30 handles up 260. So that's if we can get through 230 here, I think there's some good upside ahead. Where this thing really fails would be, again, failure to hold these highs after building this box. If it were like to crater through 210, that could open up a return back to value that could be pretty significant. So stops could be run through 210 or maybe a little bit lower, but right through that zone. The other one here is VNet. VNet has a really good rejection on today's lows here. It's right in an LVN at prior support right here. I don't know a whole lot about this one here. We do have earnings coming up pretty soon. It definitely has increased in volatility here pretty soon. So it's definitely an active stock right now. This is one of those that can swing pretty wildly back and forth here, especially when you have headline risk and whatever the company may be doing. I don't know if it's, not exactly sure here, but it looks, I'll take a look at it later. But right now you have a really good impulse move that's happened. Really strong up with a strong high and strong low. Then you had the strong high, strong low here, so another impulse move there. You know, it can continue to kind of trade in that zone here for a while. So I would treat this one very, very short-term oriented. If you are able to get in here and it gets that move back to 27s, take what you get, or at least get to a T1 target so that you can scale and reduce your risk and pocket books and profits there. Other than that, you know, if it fails to hold 21, then theoretically speaking, you got to move all the way back down toward the bottom end of the previous distribution, which could be as low as 13s. Not thinking that'll happen here. It's just obviously that's the zone to watch out for in case of failure. Here's Walmart. And Walmart's been pretty good here. We looked at this one a little bit earlier in the room. This one's been very strong overall. Has been very volatile at times. You can see this craziness that happened back here. We're currently sitting right at the highs, though. It hasn't really wanted to stay above 133 for very long before it rotates back down. I think overall, this market just remains very, very positive. The price action on it hasn't been my favorite. You go from having super low volatility, nothing trading, to very, very aggressive price action, to nothing again, to out of nowhere expansion. This is nothing type of trading again, but that precedes the next major wild move. What I mentioned in the room this morning or earlier today was that 118s could be in play if it can't get through the 133s. So if there's a failure of 133s here, perhaps 118, then back up. But I think overall this market remains poised for higher highs. It's just we're at a spot here that is kind of nearing an overdone scenario to the top. You know, we're kind of up here instead of down here. So that means we may see this move before we see that move again. But again, not eager to sell this one right now, but watching to see how it plays out, because if it does reject 133s, there could be a quick rotation back down, which could be a very good buying opportunity. Here's JPM. Oh, JPM. Now JPM, we also looked at a little bit earlier today. This one is very interesting right now. It's building. Was it JPM, or maybe we looked at another one? I think it was COP we looked at. This one's been very interesting here because it has held at these lows. Obviously, the whole industry group has looked kind of like this. The higher lows continue to remain intact. They're very shallow higher lows. You know, it's not like it's trending, you know, like this. But it's still holding and honoring those levels. The 94 level has been pretty tremendous here. That's been a very important key level. It is short-term testing the previous month's high price here. And so that's where, you know, we may see maybe a pullback into the range because it has been kind of compressing here. But at some point it looks like it's sitting on this lower edge, building some energy, and it may do some sort of lift here pretty soon. Above 102.50 opens it up to 112.50. That's the 200-day. And again, the way that today played out off the high here, perhaps it gets one pullback and then it's bouncing off the 95s, 97s for a move into 112s. So that could certainly be a way to go here, but that's about as much as I have here on JPM. Nothing more concrete than that. AMD here. AMD has been a phenomenal mover overall. Got as high as 87s here recently, and this one getting a breakout again through this ascending wedge here, right? You get that ascending wedge and boom, explosive move. So when you get a move like that, you're going to continue higher till you find a strong top, and then there's a tendency to pull back to some degree. Is this going to be a pullback and go, or do you see more of a pullback and then kind of a build and go? It's tough to tell in this scenario because usually when you see this much of a vertical move, right, there's a tendency to see kind of snapbacks that are heavier. The reason why this one's tougher is because you built out here for 1, 2, 3, 4, 5 months first. So to get a 1 month rally, not even a full month, I mean, it still has enough juice in the tank for another 2 or 3, maybe even 4 or 5 months of trending price action. So from a longer term perspective, I still like this one tremendously. Say if you've held some from 30 and you're an investor and you want to know how high it goes, I think, man, if it still stays above 60 here, you got 120 that could still be ahead, right? So even if this thing were to pull back to 60, there could be a double to 120. given how much energy is in this 5-month range. Big time explosive move here. That's 60 to 90 or almost. That's 30 handles. The next 30 handles is 90 to 120. And again, that could be over the course of the next few months. So this one looks really solid right now still. And if it were to pull back and give it a good strong low, that could be a great continuation play toward 120. So yeah, that's a good one. The other one here is Microsoft here. This one has been, again, one of those ones that's been holding up the market, and one of the big 5, big 6. Tremendous rally we've seen lately. Nice hold off the pivot range with the bounce here. This looks really, really solid overall. Nothing's really slowing this one down. Interesting news with TikTok and how that might play out, if Microsoft might be able to buy TikTok or what have you. That's going to be an interesting development to see how China reacts to that, or maybe they already have or will continue to. But that's going to be an interesting development, again, because that could also have implications for other stocks as well. I think right now the 190 level is still very important. That's the key range high. Of this key range, a move as deep as 190 could still be a buy to capture the 50% target at 220, followed by the continuation higher into, what is that, 250? 248.80, so 250. So 250 is still ahead for this one based off of this impulse move. You got the impulse, you got the rally back to the mid, you got your key range, and now you're building energy to make that move. 248.88 looks like a really strong target down the road. And I would say, you know, again, to 190 up to that level is a good one. But even if this thing were to have a deeper pullback, say to 160 to 170, it could still be a great continuation play. Right now, this one's being bought at the 200 or below time and time again. Again, not sure if we get a pullback of that magnitude at some point soon, but if we do, say in September, it could be a great follow through. So I think 248.88 is still ahead for this one. You have Apple over here as well, which has been just a rocket ship. The recent pullback to the Pima trigger zone right here, I mean, that was a solid move. 350s back to 450s. That was a 100 handle move in about 2 weeks. Just incredible. But what this did was it formed a pretty strong low. And it's trying to find a strong high. Will we get it? Who knows? But if we do get it, there could be 100, you know, that's a 100 handle move. There's a 50 handle pullback to get the midpoint, and that could be a new key range at these highs. I think if we got a key range out of this one, that would be very helpful moving forward. This one is still solid, still very bullish. It's approaching $2 trillion in market cap, right? It's hard not to keep liking this one, although the pullbacks could still happen. This one could still pull back to 400 and be a buy. But it would be nice to see a key range pullback so that we get our key range in there, and then we get ourselves some really good targets and levels that we can have confidence in. Here's Tesla. And I know we're going pretty long here. We're going on 80 minutes here. We got several more to go. Thank you all for hanging out with me today. Always my pleasure. Here's the Tesla. Now this one's sitting on support right now in the short-term basis at 1400. It's got an incredible rally right here, which took it to 1800. It looks like this is in the midst of perhaps building a double distribution profile up here. This explosive move left behind this kind of thin profile, and only this chop here has helped to increase it, right? So it's going to continue to chop in here a little bit so that this profile builds, and then at some point it may give up the lower distribution, drop down here toward 1000, and then bounce back and trade in here, in which case we build a bigger profile here, double distribution. So I think that this move was so big, you have to start compartmentalizing it to trade. And if you want to look at something in history to use as a template, it's right here. Look at this. Boom, that move was so incredible. Look right here. Boom, that move was huge. And then it traded in the upper half of that move before failing and trading in the lower half of that move before then completing and going higher. I think that's what's going to happen here as well. You have this move, you have your compartmentalization of that trading range there, and now you break down, you come down here and compartmentalize, and then you end up higher into 2,000 down the road. I think if you see 1,000, it's a likely double to 2,000 down the road, and it may not take as long as you think. Again, not yes, exactly. Tesla sellers beware. It knows how to burn the shorts. Absolutely. This one is not one that I'd be eager to sell. But it is one to buy on weakness. And the way that this looks right now looks very similar and very reminiscent of how markets would auction. And so if at some point it gives up that point here, it may only be a few days down, and then it's if you don't get some, you don't get some. And it could be a 1,000 to 1,100 move to 2,000 to 2,200. That could be a double in this one. Incredible move that this one could have. Okay, LNDC. Oh, did I pass up spot? My bad. I'll look at spot. So here's LNDC. Long-legged bullish outside day. This one's pretty wild here with the big wild days, but I don't know if those were really auctioning down there. I think those are big wick days. I don't have a whole lot of great comments about this one right now. Great support down here off 750, and then it reclaimed support off a 9. So I think generally that's bullish and would generally get you back toward resistance 1150. So I think the fact that it's holding here at the $9 level is good. It recently got that level today with one of those big tails. So I think generally speaking that would suggest it goes up to here, but it's kind of in a big range, and that could continue to be the price action for a while with an upward bias in the near term. The other one here is pins. This is Pinterest. Explosive move to the upside. A bounce off the $10 level to rally to 37 bucks here this week. This is tremendous. One of the things that we've talked about in this one is the key range here, and that's the IPO key range. And that IPO key range has been right on the money for this one. So if you look here, that's the IPO low to the high to the mid. Here's your trap, and then it goes back to the mid and then back to the low. Eventually it got the 50% expansion and the 100% expansion there at the 1081. It's bounced from there and tripled since then. Meanwhile, it's kind of rode all the key levels up the entire time doing it. We're now back above the key range high like we were before. Is this going to lead to a rotation back down as it did before? Or is this a different market? When you look at this in terms of market structure, you have, again, this market here where we're trading in here. And then you had the lower market structure here, and then this little guy here. To get back above this zone up here, many times you see a rotation all the way back down, and then you kind of trade it back in here until you're ready to go higher or trade in a different price distribution. So right now, the fact that we're right up here at these key range highs, I would say I'd be cautious, although this thing is very strong, because if we break out to the upside here, say we pull back into 32s and it is staunchly rejected, that 32 could be a buy the dip for 41, and then it could be a follow-on continuation to the 100% target at 47.50. So that's the key range analysis for this one. Here's Spotify. And then a few more here, and then we'll call it quits for the day. Spotify is holding the holding the previous month's low after the counter trend move. Been trending up. This is your pullback trend. It took out the previous month's low here today and bounced back above to close above the previous session's low and today's midpoint. That's a strong rejection. So on a 1-day basis, very good strong rejection there, and it's rejecting at a spot you would want it to reject, the previous low. So if this can hold, you have a quick test back to this blue dot, and then you have a move that can take you to this top of the pivot range. That's the midpoint of the previous month's range. So if it can hold this area, blue dot, top of pivot range, and that takes you into the 271s. Blue dot here is the 243s. Oh no, it's not. That's the 257s. Where am I at? Yeah, 257. So 257 and 271s could be the next upside targets there for this one if it can hold this zone. Those are high probability targets. Yes, it could probably do that and keep on going. But first things first, right? If you can get it and stay above the 271, that opens up this one here. So that's kind of the short-term idea right there. So that's Spotify. Ameren here. A few more to go. AMRN. This one's had, let's bring it up, some wild action here. And it hasn't really recovered from it. So, you know, again, with these types of stocks, it can be very difficult at times because headline risk and FDA approval and this and this and that. You know, it just can crush things. It doesn't even have to be earnings because of some sort of news event, right? All kinds of stuff. So this one you always got to be careful with. Having said that, I did trade it, you know, in some of this range back here when it was fantastic. Key range high with great rejections. I mean, phenomenal. We don't have any of that to work off of right now, which makes it a little bit more difficult. But we do have the $6 level, which is very important in the short term. You know, you have this kind of range right here where you have this low, and then it pops up above support here, and this is where it's been holding. So that's the zone right there. That's the whole ball game. If it can hold there, it has a shot to rally a bit, but I wouldn't hold my breath on this one just yet. At some point, it may really start to jump, but it really needs above $9 to really start making some waves. If it can get above $9, it opens up a gap fill back toward 14, and perhaps the HVN back toward 18. Which again would be a huge move from where we currently are based on percentage gain. Again, I have my doubts if it can do it, but it doesn't matter what I think. It just matters what happens. And if it can get through $8 or $9, it opens it up. That LVN is the door that opens up the HVN above. SWBI and then McDonald's to finish here. So SWBI is one that's been trending higher. Very, very good move here from the $6 level up to 28. So multiples right there. Again, during this climate right now, and any climate like this, you tend to see this type of correlation for this brand and similar industry group components. I don't think that this is going to stop the trend at any moment. I think this is what you're looking for. You're looking for these types of rejections inside the PIMA trigger zone that can be bought. Right now we're above the PIMA trigger zone. We're above the 8-period average. We haven't hit the pivot range for the month. So maybe the next pullback into, say, 25s, that LVN, will be one that may be bought for another rotation higher. It's just it's very difficult with this one to think that it's going to go down at the moment. Given the climate, this is the perfect climate for this type of stock. And we have a little bit higher until we reach actual real major hardcore resistance up here, which is right here in the 29.30 zone. So we still may have one more good move. And then we're also in this key range, or this market distribution here. So we just made the big move up. This was the ceiling of that level. There's high odds we get to the top. Once you get up here, high odds you can come right back down and go back up. Just like we saw here, then there, then here, then there. So I think this has really good odds to get back to 29.30. very soon. A retest of 25 might be a great way to get there. But once it gets there, there may be a big swing back. So just be cautious of that. And lastly, looking at McDonald's here. Mickey D's. This one's trading 204 right now. A great rotation off the lows as well. For this one, you know, it's looking very bullish with the higher lows. You have resistance across the highs, and it's trying to hold above the previous month's high. Here's the 200-day average, which it took bid, and then it retested and defended from above. So it's doing all the things that you would think it needs to happen in order for this thing to continue higher. For that to happen, it would push you back toward 220 here into these highs, and you need to stay above the 200, the 190. So this one's been trending higher just fine. This one had really great price action before. You know, if you go back to this zone, for example, where McDonald's has a really good ability to trend and just be very beautiful. So I'm kind of more nostalgic for some of that trading here recently, whereas this doesn't represent that as much. But it's not bad. It's not bad at all. Considering what we've seen in the chart, it's actually not bad. And it's doing the things that you think it should do in order to remain bullish. Although we are at a high here, maybe a pullback can get you going. As long as 190 remains intact, we may have the 220 still on this one. Chicken nuggets or chicken enchiladas? I've been going enchiladas lately. So that was a good list there. Good list. An hour and a half here. A lot of candidates, a lot of great candidates that you all brought to our attention. Thank you for that. Have a pretty good list that we already had ready for the room as well. So that combined 30 candidates probably on the list there, at least 20. TDOC is one that I've already got in play. We'll see how that plays out heading into the next session here, and there's plenty of others as well that we've talked about. So again, I want to say thank you all very much for joining me for the August monthly market outlook. If you want to learn more about our services, training, and other tools and things, you can go to pivotboss.com. And again, you can stay here inside the PivotBoss EchoFin trading room as well. The PivotBoss community room is always free to anybody to jump in and say hello and hang out. And then if you want to jump into the premium trading room, you get your first 2 months, or rather the first month is 50% off, so $49.50 just to jump into our trading room. 24-hour access to the room, including all of the great training, on-demand training and tools we have, and our fantastic traders who have been nailing it in the trading room every single day. You all have been fantastic at nailing those moves as we see them. So great job, everyone. Again, thank you very much for joining me today. I will get the recording up and published as soon as possible. Have a fantastic rest of your day, and I will see you in the trading room. Take care.